This is What Property Managers Do, the podcast that takes you inside the world of rental housing. I'm Joel Beach, and in each episode, I sit down with investors, owners, and experts to share what's really working in real estate. From boosting rental income to streamlining operations, you'll walk away with ideas you can put to work right away. If you're in the rental game, big or small, you're in the right spot. So let's get started. This is What Property Managers Do, the podcast that takes you inside the world of rental housing. I'm Joel Beach, and in each episode, I sit down with investors, owners, and experts to share what's really working in real estate. From boosting rental income to streamlining operations, you'll walk away with ideas you can put to work right away. If you're in the rental game, big or small, you're in the right spot. So let's get started. This is What Property Managers Do, the podcast that takes you inside the world of rental housing. I'm Joel Beach, and in each episode, I sit down with investors, owners, and experts to share what. Well, today we have Andrew Dean. Andrew, thank you for joining us. I appreciate your time.
Yeah, thanks for having me.
Great. I appreciate it. I think you've got a great story, and I'm sure people will be able to learn something here. So first question. So how did you get started in the multifamily and investment real estate?
Well, I met a girl, and she came from a real estate investment family. I met my wife. We dated about a year. She had just purchased, she was in college, and she had just purchased her first condo. And here I am, working and renting my own condo, thinking I was doing really well. But she owned her own and had roommates that paid for her mortgage. So we met, dated, got married, and then I learned more about her family. Her grandpa, he worked as an insurance agent for years. That's what his employment was. But he bought real estate on the side, little by little, duplex here, a fourplex there. And he had the gall to hold on to them for the entire 30-year mortgage, paid them off, and just kept them. And so by the time he was 60, he had, tens of thousands of dollars coming in every single month, no mortgages, no debt, and had a really good life. Lived till he was 90, just passed away a year ago, and had a really comfortable life. And it was, largely in part because of real estate. And now a lot of that real estate portfolio that he kept has now been passed down to his kids. And so I learned about that from him, and I thought, my wife and I, hey, why don't we just buy one property a year and just kind of do that? I don't care where I work. I was in tech sales at the time, managing a sales team, but I didn't care what job I would get. I would leverage that to buy real estate. My wife got her real estate license, and we started kind of that journey back in 2014.
So what kind of strategies have you used to help your portfolio become and grow so successfully?
So when we started, we house hacked. So we bought a duplex, lived in one side, fixed it up, rented the other side, and lived there a year, and then did it again. Bought another duplex and a fourplex and another fourplex. And we just kind of kept going that way until we finally got a house and lived with a basement apartment, rented that out. And we just kept, this was 2014, 2015, 2016, these were the years that things were starting to accelerate. And so we focused a lot on the velocity of money, meaning, how fast can we fix up a place, rent it out, refinance, the BRRRR method, refinance, and then take that money out and go use it as a down payment for another home. or another. And we mainly did duplexes, fourplexes back then, because those were the best loans.
Awesome. So what are the biggest challenges that you face in managing your properties in your portfolio?
Well, it's a great question. We've scaled now. We have about 400 units, and so we grew quite a bit. And I would say the biggest challenge that we face is property management, mainly third-party property management. And some people may not like what I'm about to say, but third-party property management companies don't 100% have your best interest in mind. They're loyal, and rightfully so. They're loyal to the company that puts bread on their table, which is the company they work for, their property manager, and that's the way it should be. But the problem is, when they make mistakes, you know, we pay for them, not them. And so and then, the problem of controlling the money, of controlling, hey, can you do this? Well, you're not my boss. I work for this company. You can't tell me what to do, blah, blah, blah. And so you kind of have that tension there. And some property management companies are a lot better than others. We have horror stories where property managers stole tens of thousands of dollars and left. We had they hired somebody. That person they hired within a month stole like $30,000 and then disappeared. We had property management companies that ran our properties at 80% expense ratio. Thought that was okay. When we fired them, the bank they were on a board of a bank that they were using for our money, and they took us off our own bank accounts and took our money. Like kind of high level, just really bad experiences. They take forever to rent. I mean, occupancy goes down, and we had a property manager that we hired with this company. They were managing 400 of our units, and they had been to our property 3 times in a year. We found out, and so just all of these just bad issues that we. So now, with that said, I've had good experiences with property management companies, where they're very communicative. They treat us. They have ownership. They work our properties as if they are the owners, and that's a rare thing, and that doesn't happen very often. But when you find that, that's a great property manager. And so that has been the largest problem. We've had properties that the property management companies just couldn't fill the units fast enough. And then they wouldn't take care of the units, so people would vacate, and so occupancy just dipped until we had a couple of properties we had to just offload at a loss, because we just couldn't do it. And then what we ended up doing is hiring or creating our own property management company. We were already doing the work pretty much, and so we just kind of started our own. And we have about 300 units in the state of Missouri, and so we have a couple property managers and 5 maintenance people there. And just like that, night and day, our occupancy shot through the roof. Maintenance is great. The tenant satisfaction is through the roof.
Talk a little bit about ensuring high occupancy and tenant satisfaction.
No, okay, that's a good question. So I have about 100 units that are being managed right now by third-party property management, about 300-ish that we manage ourselves. So I'll talk about each one. The third-party property management, how we focus on using third-party property managers is constant communication, and then focus on reporting, like vacancy reports, leases ending reports, making sure that with any third-party property manager, there's a good turn policy. We avoid any property management companies that drag their feet on tenant move outs. Like they don't do pre-move out inspections, or they wait until after the tenant moves out to even look at the unit. And even so, it might take them a week or two after they moved out to look at it. They don't do pre-leasing. They don't do the good ones do waiting lists. They have people. They constantly get leads, and then when somebody moves out or somebody gets evicted, they put somebody in real quick. So we've had third party property management companies that just, if their downtime was 1 to 2 months, and that's significant to the owners. They don't care. I mean, it's maybe a few $100 to them, but for us, it's thousands of dollars. Yeah. So unless there are good policies in place and good implementation, the property management companies will almost certainly default to do less work than they have to. That's just human nature. The best property management companies take ownership in what they do and work as if they're the owners of the property.
Awesome. So tell me your approach to property maintenance and reducing your overall maintenance costs.
Yeah. So the maintenance, as far as maintenance, with property management companies, with third party and even our own, what we do with third party property management companies is you will, the more that the property managers contact you about repairs, the more money you will save, because when you lower your threshold to like, $300 to $400, and you tell them, call me if there's a repair over this, and so I can approve it. So it's a pain point for property managers to have to call and get permission from owners. And the conversations, every property management company or every property manager that's called me about this, they know that I drill down. I will say, okay, did you get multiple quotes? Okay, what did they say? What's the scope of work? Is it the same across all? I start asking all these questions, and property managers, they just want to manage the property. This is kind of a pain point for them. And so case in point, there was a few weeks ago at one of our properties, I had a property manager call me and say, hey, we have to replace a water heater, $2,500. And I said, okay, that how many quotes did you get? He said only one. I said, it's got to be much lower than that. Let's get multiple quotes and let's get back to me. So within 3 hours, he got back to me and said, hey, I found somebody who can do it for $1,500. And great, we saved $1,000. But by doing that every time, that was a big win. He felt good about it. I felt good about it. But it's kind of a pain point for them to have to ask permission, and for me to question them on things that they should be doing, but they're not doing. And so if you question your property managers and you have those lower thresholds and you talk to them, it creates a good habit of them getting good quotes, knowing the prices of, all right, I need to stay within this on this repair. And so when you set that expectation, then you'll save a lot more money.
Awesome. What trends do you see shaping the multifamily and rental markets?
Oof. Okay. Let me get my crystal ball here. So, I mean, everybody, first of all, let me say, anybody who says, oh, I know what's going to happen is a liar. Nobody knows what's going to happen. We can all have our educated guesses. Those of us who live, breathe, and sleep this stuff, we may be a little bit more, we may be able to guess it a little bit more. But my opinion of what I'm seeing on an everyday basis, inventory is up. That's a fact. Inventory is up. There are a lot more sellers than buyers. Everybody says, yes, interest rates are high, but they've been high for 3 years. The bid ask has been way too far apart for too long. So more people will have to sell and are selling now, and more people will have to sell in the next 12 to 18 months. And so I would venture to guess a lot of these properties on the market now and in the next 12 to 18 months are people that have to sell, that need to sell. which when you have that, this will create a reduction in prices. I'm guessing prices are going to be going down, and it's already been happening, especially in the last couple months. Prices have been going down in some markets a lot more than others. But when it comes to multifamily investing, cap rates have been increasing. So, and there's no sign of any sort of compression in the future. So what that means is if you're investing in real estate right now and you have real estate, that doesn't mean sell everything right now. It means, if you're in it for the long haul, if you don't have any floating rate or, loan due in the next 12 to 18 months, you'll be fine. It just hold what you have. It doesn't matter if the value decreases on your property. If you're still cash flowing with a good fixed interest rate that's not expiring anytime soon, then you'll be fine. But this market, it's a much different market than we've ever seen. But it's going to create new opportunities. The traditional way of buying a property right now, if you look at the MLS right now, you'll see these properties for sale. I see fourplexes for sale for over $1 million in Utah, and the rents they're getting are just over $1,000 in each unit. If you go and put 25% down, your principal, interest, taxes, insurance payment is well over $7,000 on an investment loan rate, and so that doesn't make sense. So a lot of these properties are on the MLS. They're thinking that they're getting the same pricing that they could get 3-4 years ago, and it just doesn't pencil. And they're not getting buyers. These properties are sitting, which if they don't have to sell, that's good. They're just maybe testing the market or just seeing what they could get. But if they have to sell, then they have to drop the price.
Gotcha.
And that's going to create lower prices across the board.
What advice would you give new investors looking to kind of scale up their real estate holdings and their portfolios?
Well, to kind of piggyback from your previous question, the market's going to create a lot of new opportunities. Like I said, the traditional way is buying properties is going to be pretty difficult for most people for the time being, especially new people. So what you're going to have to learn to do right now is how to buy properties creatively. Creative financing, whether it's just seller financing, there's subject to, which I'm on the fence about because, the due on sale clause and whatnot. But there's a lot of creative ways to buy real estate. And what this is going to force people to do, because putting 50% down on a property is probably not in people's cards right now. And that's fine. But to figure out how to find a property and buy it creatively right now, those are the people that are going to be successful especially in the next 2 years. The interest rates will eventually go down, which means prices will go back up. Cap rates will compress. And so if you can find a way to buy properties in the next 2 years, you can hold them long term, you're just gonna jump on that price increase wagon when it eventually comes. If somebody came and asked me, hey, what's one thing or a few things that you would say to me as a beginner, or just somebody that wants to grow right now, it's pretty key. Don't over leverage yourself. Keep a good amount of reserves. And then ultimately, this is just anybody, don't ever say, I'm going to wait until the market's much better. I'm going to wait until this. I'm going to wait until that. I'm going to wait till interest rates go down. I'm going to wait till prices go down in order to justify not investing. And a lot of these are people who have invested. And so there are people that when they run into these problems, when they have problematic properties, or that investment that falls flat on its face, you lose your equity because you have to sell it. You're forced to sell it for whatever reason. You lose in the long term if you just curl up in a ball and quit. The experience that you learned from that situation is so valuable, and you can't learn it as well anywhere else. And so take that valuable experience that you went through, take it with you to the next property, and just don't give up. Just get back up. You lost money, you learned, and a lot of people, I've known people who did really well, and then all of a sudden they had a squatter, and then they just said, "I'm done. This is uncomfortable." When there's a lot of ways to avoid squatters. There's a lot of things you can do. Learn that, and then don't make that mistake again.
Where can people learn more about your properties or be in contact with you?
Yeah, they can via email. I'm really available via email. So email is just andrewdeanrealestate@gmail.com.
Perfect. Hey, I appreciate your time. Thank you so much. What a lot of good information. And I just appreciate you taking the time to meet with everybody and show them kind of what helped you. Thank you very much. Hey, thanks for watching What Property Managers Do. If you learned something, drop me a line. And if you're interested in appearing and sharing what you know, that'd be great. Either way, get in contact. Hey, thanks.